On overnights,
I believe in reason and common sense.
Leith Van Onselen from Macro Business with the Treasury of Common Sense.
Common sense never goes out of style.
Mr. Van Onselen is the chief economist of the MB Fund and MB Super and co-founder of Macro Business. Leith, hello.
G'day, Mike. How are you?
I'm well, thank you. So the RBA's decision on Tuesday to hold interest rates, and I must say, Ms. Bullock, I think, to my ear anyway, all I heard was, perfecting the art of poly-speak, but it's been my experience in the national capital that nobody gets into the top job unless you play the politics of the day. But how do you see it?
Yeah, look, to be honest with you, the decision to hold rates was pretty much expected by 99.9% of economists and analysts out there. So it was absolutely no surprise. And even the RBA's statement that came out at 2:30 on Tuesday was pretty much as expected. Basically what they said was that, inflation's coming down. They acknowledged that. It's come down a bit faster than they thought. But they still said it's too high, and they're going to basically wait for the data to play out to see which way the direction goes. So they did tone down their language a little bit. So they said that basically that the interest rates may have to be increased in the future, depending on the data flow. But look, it was a pretty sensible statement. They just said they're going to wait to see how the data plays out. If it comes in weaker than they expect, which I think it will, the implication is they'll cut. And if it comes in stronger than they forecast, well, then implication is they could raise rates. So I'm tipping that rates will stay on hold for several meetings, and the meetings are now every 6 weeks. And the RBA will probably start cutting rates in the second half of this year.
I would imagine they're a bit very wary of making predictions after Philip Lowe said he didn't see any interest rates in the future. And then what have we had since then? 13 of them, I think.
That's right, yeah, 4.25% of rate hikes. So,
yep.
Look, one of the reasons why I think rates are going to come down quicker than what a lot of people think is, first, global inflation, Australia and abroad, is falling quicker than most people think. And a lot of that's because tradable inflation, which is basically all the stuff that comes off a ship, is falling incredibly quickly. We also don't have the energy price inflation impetus that we had last year. So basically sort of global gas prices and coal prices, have basically stopped rising. In fact, they're falling in some places, which means that we probably won't get that energy shock coming through. And the bigger one, Mike, is that the Reserve Bank is incredibly bullish on the labour market. So they've basically tipped that Australia's unemployment rate will only go up slightly by the end of the year. So they're tipping 4.3% unemployment rate from 3.9% currently by December. So that means basically full 12 months. Because we only got to the data's only to December. Full 12 months of only 0.4% unemployment increase. Now that's incredibly optimistic and pretty much is the most optimistic out of all economists. And I'm tipping unemployment will be more likely to be 5% at the end of the year. And what that basically means is that if unemployment does go up faster than they think, which seems incredibly likely, they're more likely to cut interest rates.
Let's go to the situation with dwelling approvals. It looks pretty grim to me. Tell me what you see.
Look, it's an absolute national disaster zone, I'll be honest. So basically, the Australian Bureau of Statistics released its dwelling approvals data for the year to December. So it was the December quarter, but you can basically get the whole of last year. And what happened was basically only 162,000 homes were approved last calendar year. Now, that is the lowest in about 12 years. So it's a really poor figure. And it's also 78,000 less than what the Albanese government's housing target. As listeners might remember, the federal government committed to building 1.2 million homes over 5 years. So that's 240,000 homes a year. And yet the dwelling approvals data was only 162,000. So it's so far below what we need, given Australia's rampant population growth. And what it basically means is that we're going to have a worsening housing crisis and a worsening rental crisis because we're not going to build enough homes to house the population. And it's not just the dwelling approvals, Mike. It's basically dwelling commencements is at a decade low, dwelling completions is around about a decade low, and also loans for new homes. So that's both to build them and buy them was also released by the Australian Bureau of Statistics last week, and that's basically crashed to close to its lowest level ever. So all the forward-looking indicators on dwelling construction are absolutely in the gutter, hovering around decade lows, which is exactly what we don't need when we're growing the population at a record rate.
They're not even close, and it doesn't look like they're going to even get close in the foreseeable future, do they?
No, absolutely not, especially not when you're in an era of high interest rates. Obviously, a lot of builders going bust. Another major one went broke last week.
I noticed, yeah.
We've got labour shortages, and obviously materials costs are about 40% higher than they were pre-pandemic. So basically all the ingredients there are an absolute disaster zone if you want to build houses. And at the same time, we're running record high demand through this huge immigration program. So it's basically a recipe for a rental crisis.
You bet. Unfortunately, it is. Can we run through this? This, I think, really confirms what a lot of us, including me, have suspected for a long time and said, and we're not the only ones, of course. Some commentators have gone along these lines. But talking about grim, this is grim. Why Australia is in a productivity sinkhole.
Yeah, so basically some data came out late last week, and it basically compared the productivity performance across a whole bunch of advanced nations. So we're talking about Canada, US, New Zealand, America, United Kingdom, the Eurozone, all those places. And basically Australia has the worst productivity performance. So we're talking about labour productivity here, which is GDP per hour worked. And we have the worst productivity performance out of all those nations by a long shot, followed by Canada. Now, according to this data, Australia's labour productivity is basically tracking at the same level as it was in 2016. So it's really poor. And the main reason for that is basically that Australia's suffered from what's called capital shallowing. So what that is because our population's grown so quickly, it's basically grown a lot faster than we've grown business investment, infrastructure, and also housing. And what this basically meant is that we've had this less capital per worker, which is absolutely disastrous for productivity. And the real telling point here, Mike, is that the other country that's also had abysmal productivity performance is Canada, which has also had a record migration boom. And their population grew by about 1.2 million people last year, which is off the charts. And they've had a similar productivity decline. And the National Bank of Canada, which is one of their big five banks, put out a really good report couple of weeks ago, and it basically argued that Australia's in what's called a population trap. Sorry, Canada's in a population trap. And that's basically, again, the same problem as Australia. They diagnosed, they said that Canada's population's grown faster than business investment, infrastructure and housing. And that's basically meant that they've got this, worsening congestion costs and, declining productivity. And basically Australia and Canada are in exactly the same boat because they're running the same stupid policies.
Couple of quotes here from Gerard Manac. Australia's population-led growth model was a demonstrable failure in the 15 years prior to the pandemic. Remarkably, the country now seems to be doubling down on the same strategy. What was it Einstein said about insanity being doing the same thing over and over and expecting a different result? Migrants in Australia earn less than the median pay. They're more likely to be unemployed than the general population. The increased labour supply drives down wages, causing business to avoid investing in labour-saving technology and automation for the obvious reason. Why would you do that if you can get cheap labour? Interestingly, Australia's labour productivity growth soared when Australia's net overseas migration turned negative during the pandemic. All this stuff is 180 degrees exactly the opposite of the spin that we get from the government.
Yeah, it is, unfortunately. So basically, the government, outfits like the Grattan Institute and other sort of migration shills, that running a high immigration policy is good for productivity because the migration system is skilled, blah, blah, blah. Therefore, if you bring over a whole bunch of skilled migrants, you're going to boost productivity. The problem is the empirical data says the opposite. The majority of Australia's migration program, even the permanent migration program, is actually not skilled. Take the permanent migration program. So 60% of that, if you exclude the humanitarian intake, which is very unskilled, is supposedly skilled. Problem is, half of those partners of skilled migrants who are unskilled. So the whole notion that we're running this skilled migration program is an absolute farce, and it's basically borne out by the dismal productivity performance of Australia, which started basically when we ramped up immigration in the mid-2000s, and exactly the same things happening in Canada. So there is no coincidence as to why Australia and Canada are both experiencing the same outcomes. They're basically running a population growth at levels that are far beyond their business investment, infrastructure investment and housing. And as Gerard Manac said, quite rightly said, he said the biggest ingredient to Australia's poor productivity performance is, quote, a giant capital to labour switch. Australia relied on increasing labour supply rather than increasing investment to drive growth. So basically that's that capital shallowing argument I just mentioned. And Australia and Canada are doing exactly the same thing, and we've got the same outcomes. It's not a coincidence.
Seems like simple arithmetic is being completely ignored here. Leith, appreciate your time and comments as always. Thank you for that.
Speak to you next time.
Leith Van Onselen is Chief Economist of the MB Fund and MB Super, co-founder of Macro Business.